All right, today is November 22nd, 2022. Just going to go over where we are in the market. Last week or 2 weeks ago, November 7, we had a pretty big weekly range. We're on the weekly chart right now. We had a very large weekly range. And we've just kind of been hanging around inside of that range for the last couple of weeks. So last week was this week, a very small range. This week, it looks like the previous week low is still holding as support. So we'll just draw a line here. This is the previous week high up at 4053. The previous week low was at 3915. And I always like to, if it's an up move, like if we're in an up move and you can see we've been ticking up for the last few weeks, I like to kind of note that with a green line. Okay, so that's our analysis on the weekly chart. Let's go to the 4 hour. Actually, you know what? Let me do one other thing I like to do. I like to come over here and grab this Fibonacci tool, retracements. And we're going to go to that week because we're still in that range. So we're going to go to that week's low and we're going to bring that up to the previous high. Okay, like the most recent high, which would have been last week's high. And that kind of gives us an idea of where we are in the range right now. All right, let's go to the 4 hour chart. All right, we're looking at the same picture, only it's giving you an idea where we are in that, in that overall setup. Okay, so last week was 14th, and we hit this high at 4053. We pulled back to the 38% level, so 38% of the range we're looking at. Hit the 100 period moving average on the 4 hour chart, and now we are starting to make another run up, and we'll come to this. We're going to talk about this next, but I just want to note also that the 200 is below the 100. Okay, and we're just going to zero in on these 4 hour bars, and you can see, okay, on high volume, this is high volume, 9 to 1 was a up move, okay? So we have let's highlight that. And I'm just gonna do another line right here. So when we get microscopic, we are delineating this range, okay? The 9 to 1 range, okay, ended here. All right, and that's high volume. We like to play off of those high volume ranges. So that's, overall, that's consistent with what I was talking about. We're in an up move. Last few weeks have been moving up, and we're kind of just getting a little microscopic here, and we're looking at things on the 4 hour chart. Moving averages are separating, they're above each other. And on the 4 hour chart, we can see some nice ranges being formed. And for those day traders, those swing traders, that's the kind of thinking you want to get towards. What kind of range am I in? What is the market doing overall? Is it breaking out high? Is it breaking out low? Where are my moving averages in relationship to each other? And then we're going to look at, when we get a little bit finer tuned, we're going to look at the stochastic. Okay, so let's go down to our 5 minute. Okay, so now, see, what kind of range you are in. What the market is doing overall. And so you know what you should be looking for. Okay, so this is the previous 4 hour range, and the this is the 9 to 1 range. All right, so we have some highs up here at 390, and some lows at 396. You see where your moving averages are in relationship to one another. The 100 is above the 200 period moving average. Your last entry here was here, right at this tiny little pullback. Not the greatest move. This is the better move. After 9, pulled back to the moving averages, and then you would have caught a nice upswing. All right, let's get even a little more microscopic. Let's go down to the 1, and we can really zero in on some opportunities over the last few hours. Okay, and again, moving averages are consistent. All right, and see, when you're on this level, you're really looking at the 1 hour, right? You're really looking at the 1 hour as your reference chart. So you're looking at, okay, I want to take a quick swing trade, and I'm going to be looking at the 1 hour on not only what the market is doing on an hourly basis, but I'm also going to be looking at the 1 hour to see where should I place my stop loss when I'm entering the trade. Okay, so let's go to your 1 hour chart, 1 minute chart, sorry. You have multiple swings in here that you could have, gotten in on. And just note that, whenever the stochastic is oversold, the market is moving up. So we're getting in with the idea that the market is going to continue to make new highs, right? So your entry points are like here. Stop loss would have been below the 1 hour range you're targeting. Another entry point was here, and then you would have popped out here. Another entry point was here, popped out here. Now these are quick little swing trades. The last one was here. This is a really good one right there. This is the one I took, and I wasn't perfect with it. I just did a micro contract trade. I don't like swing trading with big positions. I just do it for fun. So this today, I think I got in somewhere around here. That's why I have this line. Stochastic was oversold. See that? Oversold. And I put my stop loss probably, let's see where we were on the 1 hour. Yeah, my stop loss would have been here. Somewhere, I'm looking at the previous period low. Okay, so if I got in here, my stop loss was here below this candle. Okay, now let's zero down and look at that. Okay, so my stop loss all right, here we go. So my entry point was here. Stop loss was below this level. I was looking at my 1 hour for that, where support was bouncing. And I also look at my moving averages. I want everything to be, stacked, okay? Meaning I want the 100 to be above the 200. Now, when I got in, okay, I'm also looking at the tick indicator. And that's also telling me where the market, you're looking at the swing of the entire market with this indicator. There's 500 or so stocks that this thing is following. And when all of them are oversold, or most of them are oversold, that's when you should be expecting a pushback to the mean, right? So you want to be in sync with the market. So I was here, you can see where my cursor's moving, and look down at the bottom here. And so my stochastic was oversold. At the same time, the whole entire tick indicator was saying the market was oversold. Okay, so I was in at 1250, and I'm also looking at, you know, when the market gets overbought and the tick is hitting that second standard deviation or closing above that, I'm expecting a pullback to the mean. So that's my exit, right? So I'm in here, I'm out here at 1305. You know, did I get all of the move? No. But, you know, the point is, my thinking with swing trading is, it's you can only get what the market's giving you. So I don't really try to stay in these trades really long periods of time thinking I'm going to capture the entire move for the day. I want to take a little bit, move on. So, you know, where my bigger positions are in options trades like this. You know, like I'm in a calendar spread here, and you know, I tend to, well, not tend to, but definitely, you know, if I were playing, say, 10 grand, I would rather do that on a calendar because I have all of this room where the market can move around, and I don't have to be precise. And every day that goes by, you know, you're collecting some theta decay, right? So the market can go up or down or stay the same, and as long as you're managing that position, you are making money there. Okay, so that's the stuff that I really like to do. I do the swing trading as small as possible, just for market engagement. Okay, like just to stay aware of the market, to continue playing the game. All right, so this was SPY recap, and please, if you like this, hit the subscribe, leave a comment. We will talk soon. Thank you.